I'm Khalid Bryan, broker and owner of the Investment Property Gurus in Fort Lauderdale, Florida. And if you are in the market for a new property, or if you're an agent helping someone purchase a new property, I want to give you probably my most important thing to check first: the tax roll. Everything you can imagine can be found in the tax roll. The reasons the tax roll is usually the first thing I'll check when looking into a new deal is, number one, it confirms the layout and square footage of a property. If a property is on MLS listed as a 5.3, but you go on tax roll and tax roll says it's a 2.1, well, guess what? I'm going to value it and send you my offer on the 2.1 valuation. If your owner wants the full valuation of their property, they're going to have to take that up and have it legalized and updated on the county records. If the county says it's legally a 2.1, then that's what I'm purchasing. This also, if I'm not mistaken, does apply to your appraisal. They will appraise it at whatever it legally says it is on the tax roll. You can't just do a bunch of illegal upgrades and think you're going to increase your appraised value. If it's not safe, if it's deemed structurally unsound, they will make you tear it down. On that note, if you do have a property where you discover an illegal addition, it's not a guaranteed tear down. You are able to go to talk to the county or the zoning department. You are able to talk to the planning and zoning department to see if you can get variance or the use change. They may also be able to inspect your property and deem it safe and then allow you to keep it. If they deem it unsafe, they may give you the opportunity to repair it. Otherwise, they will say tear it down. A lot of this goes into zoning as far as setback lines. Your property has to be a certain distance away from the street, a certain distance away from the sidewalk. You have to have a certain amount of free space. So the property can only take up a certain square footage based on the lot amount. So all of this goes into zoning, development, planning, density. There's a lot going into it. On that note, if you want to know how much they bought it for, the tax roll will actually show public record of every transaction in the property's history from, more often than not, the time it was built. This is handy when you want to go into negotiations to see how, aggressive you can really be. If you see they bought it for $50,000 cash back in 2003 and now the market's up and they're asking for 300, well, okay, this is profit. They're looking at this and they're going to probably walk away with some money. It's a good indication that you might be able to have some wiggle room in your negotiations. Even if you wanted a credit, you can see that they can afford it. I'll also go to the tax roll because there is a way on IMAP at least where we can check off-market sales to help us with our comparables. Sometimes there's neighborhoods where there isn't much activity on MLS and we need to value these properties without having an appraisal done. So go to the tax roll to look at similar layout properties nearby and see what they sold for off market. The tax roll is also really helpful if you're an investor looking to add value because it lets you know the property's zoning uses. Let's just say I had a situation where my team sold a client a triplex last year. After taking a zoning and density class, I was able to look back on the tax roll and I realized that this triplex is actually zoned to build up to 6 units. So we're going to go back, we're going to review the survey and see what we can do because there's definitely a bunch of value to add to that property and you can only imagine what that's going to do to its valuation. Understanding zoning, density, and surveys is really helpful in your career if you are planning to be a successful real estate agent and want to serve your clients the best you can. Nothing puts them in better hands than having a knowledgeable agent that is well versed in different situations that can come up. There's moments where in a property's closing, when they perform the survey, they'll realize that the neighbor's fence is actually taking up 10 feet of your yard space. So little things like that, you have to know what to look out for. It's not always just looking at the property and noticing a stain on the ceiling. You want to look at the tax roll and the survey to see if there's anything or any red flags you want to point out to your client or notice yourself if you are the purchaser in this situation. Accessing public county tax records is also beneficial if you're a tenant. If you are in the process of maybe moving into a property that's off market, it's not through a realtor, and you're talking to someone who's claiming to be the owner, well, you can go on the tax records and see the current owner of record, and you can compare that to the name of the person you're talking to. If the name of the person you're talking to has no relation to the owner of record, then that's something that you might take as a red flag and maybe want to look further into. It's possible that they're just a management company or the owner's representation, but either way, you need to know because you're entering into an agreement, which is the lease with the owner of that property. Don't be scammed. Don't be frauded. Don't be defrauded because it is a thing where there have been cases I've heard of people making fake listings and they'll show you the property because they got the lockbox code somehow and then they'll say, give me the money and you can move in next week. You pay them the money and they ran off to Tahiti or somewhere. I don't know. LaGuardia, wherever. Either way, they're nowhere to be found. You can't get your money back because you've paid in certified hard funds like a money order or a cashier's check, and they are long gone in the wind, and now you are in this property and the owner has no idea who you are. Not a place you want to be. So if you can just, I'll tell you how to check the tax roll. So whatever your county is, property appraiser, and it should have an option for a property search where you can pull it up and it'll give you everything from the current owner's name, who they bought it from, how much they paid for it, 3 owners back. If I'm not mistaken, you can pull up the deed of this property. You can run off-market comparables. You can see the layout, how big the property is, how many square feet. Have there been any additions notated? You can check the taxes, see how much the taxes are. Have they paid their taxes? Are they behind on taxes? How far behind on the taxes are they? All of these things are in public records on the tax roll. So definitely, if you want to be a better realtor, if you want to be a better investor, if you want to be a realtor at all or investor at all, or just a educated home buyer, learn how to look into the tax roll. So if there's a property you're interested in, figure out how to look up the tax roll on it. Add some little wrinkles to your brain, because I heard you get a new wrinkle. That's about it for today. If you are interested in being a realtor and don't have your license yet, 30% off online real estate school at Colibri Real Estate. There's a 30% link in my description or below if you're looking at this in my social media stories. I'm Khalid Bryan. Follow me on Instagram. Khalid Explains It All. TheInvestmentPropertyGurus.com. We are hiring and recruiting licensed, inexperienced, or experienced agents. We will train you. We will keep you accountable, and we care. I give a heck. So ask me questions. I'll see you in the next one.